Welcome to the Tesla Economist. Please hit the thumbs up and remember to subscribe. You can also follow me on Twitter and talk to me on Patreon. We often hear about EV market share, especially when it comes to Tesla. Of course, if it's coming from the mainstream media, then they put it into the perspective of how Tesla is losing market share. Although market share is a useful measurement, well, it's still a statistic. And remember what Mark Twain said, there are lies, damned lies, and statistics. Generally, market share in a matured industry will give us some indication of what brands are the most popular, but not in the EV industry. It's actually a statistic that we can, well, I don't want to say completely ignore, but at least not put too much weight on, at least when it comes to valuing Tesla as a company or measuring what brands are popular in the EV industry as a whole. What we really want is share of market demand. That is the real statistic to use. And in the smartphone industry, market share would be synonymous with that measurement, as the phone companies can pretty much make as many as they want, at least when there's no chip shortages. So what do I mean by share of market demand? And why is market share so inaccurate? Well, for starters, we know very well that Tesla have a huge backlog of orders. They don't just sell every car they make, but they've sold every car they'll make until next year, at least for some models. Now, if Tesla were not supply constrained, then obviously there'd be a significantly larger number of Tesla sales, which would mean Tesla would have a much larger market share, but they can't make their cars fast enough. However, at the same time, their competition, for lack of a better word, well, they're able to make enough cars. In fact, they make more cars than their actual demand, which is why you're able to buy a brand new ID.3 in Germany right now by just going to your local Volkswagen dealer. Therefore, the competition's supply has exceeded their natural demand. In fact, I rang a Volkswagen dealer in California and it would seem they had a few ID.4s in their showroom that you could just go in and buy right away. And get this, they were charging retail price, except for a mandatory paint protection extra at $2,000. Not only that, this car also receives a $7,500 tax credit. Just imagine if Tesla had Model Ys for sale in their showrooms with a $7,500 tax credit. Yeah, it just wouldn't happen. Therefore, market share is an inaccurate way of measuring how popular a vehicle is just by the quantity that they sell. But not only that, all of Tesla's sales in their market share goes straight to the end user. The consumer is the owner of the car. There is no middleman. As we know, Tesla do not have to go through the car dealer network. I'm still not sure how they managed to negate that with so much regulation in the industry, although Tesla still haven't successfully circumvented Texas yet. Ironically, Texas is where Tesla's largest factory will be too. So perhaps that will change eventually. Anyway, Texas is far from the make or break of the company. Anyway, Tesla sell directly to the consumer, but legacy autos sell directly to the car dealerships. And the car dealerships have plenty of stock of these EVs in their showrooms. Oh, do you see it yet? Well, these car sales that legacy autos make, well, these are to actual car dealers, as they have to go through the car dealer network. And a lot of these cars are still in the car dealers' showrooms. In other words, of the market share that we are told, well, for the legacy autos, we're not just counting cars that the end user have purchased, but also the cars that the car dealers have purchased that have not been sold to the end user yet. Therefore, vehicles sold each month by the legacy manufacturers is not the same as vehicles sold each month by Tesla. Tesla's numbers represent sales to the end user. Legacy autos are through car dealers, which means market share is really a closer representation of simply how many cars each manufacturer can currently produce, not how many the end user wants. Once Tesla start ramping up significantly, then this will all change. Also, Tesla can only arbitrarily decide which market to deliver their autos, so some months their market share will be significantly lower than others, which makes for great FUD in the mainstream media. And they can use statistics like Tesla's sales were down 50% in Europe from last month, just because Tesla decided to sell more cars in China one month. Tesla sell every single car they make. They need to maintain presence as best as possible everywhere they can, but it also needs to be done in as efficient way as possible. For example, it's not feasible to evenly spread every batch of car sales over every country in Europe. It's much more efficient to just ship off a load to Norway in one go, for example, which is what Tesla just did. They just started deliveries for the Model Y in Norway, and then it instantly became the best-selling EV in the country, and that was just how many cars Tesla wanted to deliver there. There are likely still a ton of Model Y orders still pending. But do you see how much it skews the market share? So when you hear headlines like, Tesla is losing market share, just ignore them. The mainstream media know it makes great headlines and gets good clicks, People like to read about people failing, especially billionaires and especially companies, that they suffer remorse from not investing in. Their emotion of, if only I'd put $10,000 into Tesla back sometime, is then comforted by these headlines and articles to make them feel, oh, lucky I didn't put any money in Tesla after all, haha, all those suckers that did, stupid fanboys. On top of that, the media likes to protect their best customers, which are legacy auto dealers. If legacy auto dealers fail, well, guess what? Maybe the mainstream media could even go down with them. But even those that are still standing, well, they'll have certainly downsized a bit. But mainstream media is ready for disruption. Google, Facebook and Twitter were not the disruption we wanted. Although YouTube's good, right? Now, when we see Berlin and Texas online ramping up as many Model Ys as physically possible, then we might start to see a more accurate market share, as Tesla can start to deliver closer to their demand. In the meantime, legacy autos don't appear to have much on the horizon that will further increase their sales, at least nothing significant, or close to what Tesla will be doing. I expect Tesla's US market share to approach closer to possibly 90%, which is crazy, and Tesla's actual autos market share will be closer to 15 to 20% of the US, and this is just in the next year or so. I think Giga Texas alone will do more than this over time, particularly when the Cybertruck is released. But does that make it a monopoly? Well, no. This is like Google, that controls something like 90% of search advertising in the US. But when you put it into perspective, it's only something like 10 to 20% of the entire advertising industry. Similar to Tesla, they may have 90% of the BEV market, but only 10 to 20% of the actual autos market, at least for now. Of course, I do anticipate that ICE sales will start to dwindle too, and I believe consumers will start to realise this. A lot of people say I give too much credit to the intelligence of consumers, or people in general. But we're not talking about people in general. We're talking about people who can afford a brand new car at around $50,000. Now, when you take the demographic of such a consumer and view the socioeconomics, then the probability is that they are smarter and more educated than the majority of the people in the country. And when you spend that much on a car, then you're likely to do some research. With Tesla being such a buzzword and only growing, there's a chance that said consumer might at least look into Tesla. On top of that, socioeconomics also say that this demographic is more likely to be in contact with others of similar socioeconomic levels, implying the people that they know have a higher chance of having a Tesla. In other words, their friends, family or neighbours have possibly shown them their Tesla already, so they're familiar with the brand. $50,000 is a lot of money to spend on a consumer item, and some consumers do extensive research when buying a new car. So I expect Tesla's market share to eventually grow significantly more in all markets. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.